Okay, this is Sherrie questioning all, and right now I am questioning what the heck is happening with the metals in the way of them being smashed. And I have the pleasure and honor of having David Morgan of silver-investor.com and author of the Morgan Report with me to answer some of these questions. Hi, David, you there?
I am here, Sherrie.
I want to tell you thank you so much for talking to me about what's going on in the metals and what you think is happening right now.
Well, it's my pleasure, and, we'll state the facts first. One, a lot of my contemporaries have been pretty bullish here the last few months, and I've been somewhat bearish. I've been telling our members and also the public domain, because I do a lot of interviews, as you know, that I felt that the metals had some more work to do, probably sideways to down. And I was telling the members that I thought the 28 level would be about it. I also thought that the 1550 level for gold would probably be about it. And that's basically where we are today. We're under the $28 level. I also cautioned everybody that the worst case I could see so far would be this 26 and change, I call it, because it's not 26.00 on silver. It's had spike lows down there twice, and in both cases it's been very strong buying for a very short period of time, and the metal shot right back up.
But today, I saw silver did touch 26.68 briefly, and now it's back up above 27. It's at 27.15 right now. So what do you think we're really at the bottom here?
I think we are within a month or so. I've been calling a June bottom. What normally happens in these major bull markets is the shares lead the metal. And I know I'm going to get some flack for making that statement. I use the word usually. But what takes place is the mining equities usually bottom before the metals bottom. And then they also usually peak before the metals peak. That's not always the case. We are getting really creamed in the mining shares. I mean, it's the worst it's been in 31 years. So the shares are very underpriced relative to what their true value is. And again, the metals are getting hit. So I think the shares are really very close to a bottom here. Almost every indicator you want to use indicates that they are at a bottom or very close to a bottom. So very safe to buy in this range. And the metals, of course, maybe have some more work to do, but as you outlined, we've already been to 26.68, and it's bounced back up. And what happens in those levels is that you see strong buying at that low. It's all computer paper buying for the most part, and the price shoots back up. So I'll stick my neck out and say I think this is probably, as close to the bottom as we're going to get. It could go lower. We'll probably have another month perhaps. But with all that's going on geopolitically, it's really counterintuitive to see these kind of sell-offs in the metals.
Well, that's what, I'm a subscriber to your report, and I really love about it is that I don't have a degree in finance, and basically 99% of the people are like me. And so I like how you write the plain, simple, where I can understand what's going on. But here's my questions to you right now. It almost, when you talk about counterintuitive, it just doesn't make sense. And the understanding of what's happening, especially with the fact that the first quarter, even the Japanese retirement fund, which has never bought gold before, has been buying gold. Soros, PIMCO, a Texas teacher retirement fund. I mean, the list goes on about the acquiring of gold in the first quarter. Yet, gold has been going down. And tell me if I'm right, and again, it's that simple mind, that I kind of equate it to the show Survivor, Outlast and Outplay, and that seems like the psychological thing that's going on that the banks are doing right now with metals. I mean, is that kind of a good analogy?
Yeah, I agree. I might say it's slightly different, but you're right. The fundamental facts are that there's probably more interest in gold now than there's been in a very long time. So it would appear that the price should be going higher from all the fundamental facts and the tensions in the economic environment. I mean, with the euro basically blowing apart or very close to that, all the stress that's going on with the debt loads and everything else we talk about constantly, and yet here they are. Well, as you know, Sherrie was at the Money Show in Las Vegas. It's actually going on today as we're doing this interview. I was there for 2 days, not the entire 4. And Bill Murphy was speaking at that event as well as myself. And Bill pointed out how often gold does the opposite of what you'd expect. And this is a very big case in point. His idea, and I tend to agree with it, is that we're gold to reflect all that's going on in the economic environment, the political system, and making new highs right now as logic would dictate it would. It would feed on itself. In other words, the psychology is the most important thing that could be controlled by the paper markets. And the psychology right now is, why isn't gold going up? So massive amounts of paper, gold, and silver are being sold through the systems in the futures markets to keep the psychology puzzled, because Johnny-come-lately on the street that maybe fall in the gold market in a very cursory way, a very small way, pays attention every once in a while, is looking at the euro perhaps and what's going on in the mainstream press and saying to himself or herself, why in the heck isn't gold going up? It's been going down like 11 days in a row, or 10 out of the last 12. That fortifies their belief system that, oh, well, gold can't be a good investment. Gold should be going up right now, and it's not. Oh, I'm not going to buy gold. And this is exactly the manipulation, not only in the price structure, but in the mindset. And this is something that I commend you on, Sherrie, because really, this is an area that, quite honestly, I don't remember ever being interviewed on. But that's the idea. I was in this movie called The Four Horsemen, and they had 23 thinkers across the globe that talked basically about all the economic, political problems that the world faces and solutions to those problems. And I forget the lady's name, but she was, in my view, quite intelligent. And she talked about the control mechanism, and she called it the cognitive map. In other words, how we think. And she says that's what it's based on. It's a cognitive map. It's how the controllers, the media, if you will, as a big, as a word that covers the whole basis. The media controls your thinking. They've got you. And again, this is what I think is going on.
Well, see, that's from my talking to people, and that's why I did want to do this interview with you. There's so many people over the last 3 years that have believed in the metals. And what I find interesting is that even last year, I believe about midpoint, Citigroup even came out and said, oh, by the end of 2011, gold will be at $2,000. We were hearing gold's going to be at $2,000 at the end of 2011. And it's almost as if a setup for people to buy into it at $1,600 or $1,700, and then it just gets smashed. And psychologically, those that have believed in gold and silver are now almost giving up on it. I mean, are you finding that they're really getting into the psyche of people, and is that the purpose of it?
Well, I think it is the purpose of it, and I also think, yes, they are certainly getting to some people. I mean, this money show I just returned from, I was with a pretty large-sized retail bullion dealer, and they're selling quite a bit at these low levels, but they're also getting sellbacks. There's a fair amount of people that, they've had it, and some are selling at a loss, and some are selling at a profit. That's, all markets go up and down. The metals are no exception, but the problem with the metals is this, what we're talking about, this psychological aspect, because people think in terms of dollars regardless of what they should be thinking of, and I'll explain that. By definition, if real money, gold and silver, are true wealth, and they are and they have been for thousands of years, and you accumulate more coins in any given year, by definition you are wealthier. But that's not how people think. The way they think is, I bought it at 35, and now it's at 28, and I've lost money. Well, I won't lie. I would say you haven't lost quote-unquote money if you need to cash out and, pay a bill or, make a purchase of some type. But in reality, if you have more silver, more gold, or more of both over any time frame, you are, again, by definition, wealthier. So that's something that most people can't even grasp thinking-wise. They might think about it intellectually and say, oh, that makes sense. But when it comes to the reality of what is the price on a given day, and especially when you have these long consolidations like we're witnessing, where it's been, hitting highs. I mean, it's a year and a couple of weeks. I mean, you go back into last year, silver was hitting the $48 level at the very, very end of April. Now we're in mid-May 2012. I bet if you did a survey from the time silver hit 35 and moved all the way up to 48 with every silver bug you could find and asked them, do you think you'll see silver under 30 in the next year or two? And I'll bet you 98% of them would say, no, will never happen. Well, here we are.
Right. Yeah. I mean, silver was last year, towards the end of last year, it was, of the futures reports of the charts that I would look at, it was highest increase of any commodity of value. And now, this year, if you're looking at the chart, in 1 year's time, it's minus 20% in the way of value from it was a year ago. Yet, there's enough information out there about silver, and there's a great article saying it's the most important metal in the world. Silver is used in almost every electronic product, in our light switches. It's a very important metal, and let's see, in the Patriot missiles, it's 16 pounds of it. Silver's not recycled like gold. And and from all that I've read, and correct me, we've used almost all the above ground, the U.S. and Canada, and yet we have China and India, which are upcoming economies that estimated to use twice as much. So the supplies, am I correct in saying the supplies really aren't out there? And this whole manipulation of prices even maybe causing the supplies to go faster?
Well, a couple corrections. One is silver is recycled. There's a lot of applications where it cannot be recycled or it's uneconomic to recycle it. But the round numbers, depending on which study you look at, there's probably 200 million ounces of silver recycled in any given year. I don't know if I believe that totally or not, but, there is a great deal. I mean, for example, the public is, in my view, is dumbed down, generally speaking. And there's a lot of these, cash for gold places all over the place.
Right.
And so what people don't really realize in this cash for gold is a lot of people are, turning in their gold. They don't want the mismatched earrings or the necklace or the bracelet or the ring or whatever. But they never stop to consider that, 14 karat, 60 karat, 18 karat, 22 karat gold is always mixed with silver. And so there's a lot of silver that comes through this gold buying apparatus. That's one thing. The other thing is there is still some... And
they're not getting paid on that silver. They're only getting paid on the gold part.
But they do that. They do it very unfairly. I mean, basically, most of those places, you're lucky to get 30% on a dollar. I mean, if you melted it down yourself and weighed it at a coin dealer, you would be getting substantially more money. So you could say, they're not getting paid for the silver. They're not getting a fair price in any event.
Right.
The other thing was supply. Supply was in a deficit from 1990 through and including 2006. And around 2006 or 7, depending which study, either CPM Group or the Silver Institute study, said, and I tend to agree, that the overall mining supply of silver was greater than total demand. And I think that's borne out by the facts. The facts are that the above-ground bullion supply at probably 2003, 4, 5 was around 500 million ounces, maybe even less. And today we know we have 1 billion ounces. So it's doubled over the last 5 years. And the reason being is mine production has increased substantially over the last 10 years. There's been a huge increase in the commodities boom. It's not just the metals, it's the base metals, it's energy, it's food, it's lumber, you name it. China's been on this huge build-out program for the last decade. They have demanded all kinds of raw materials, which means commodities, and there's been this big push to increase production of all commodities. Well, silver's a byproduct of base metal mining primarily. Only about 25 to 30% of the silver is mined out of primary silver mines. So copper, for example, provides 25% of the world's silver supply. Lead and zinc combined allow for 35% of the silver supply. So just those two alone are 60% of the silver supply. Actually, about 13% of the silver supply comes as a result of gold mining. So all these commodities that have been sought after so strongly has increased the amount of silver. So because of that, there has been an increase, not only in the amount of silver coming above ground, but the amount that is actually needed or demanded by the market. So there's been enough silver to fill total demand, which means investment and industrial demand. But the stockpiles, if you want to call them that, have actually increased over the last 5 years or so.
Okay. Well, then that I did not realize. I thought the supply and demand, that the demand was almost outstripping all the supply over the last few years.
First of all, everything I said, I hope I was very clear. Supply and demand always meet every year, regardless of what anyone tells you. Now, the reason that you get a higher price is because someone's willing to pay more for something that they have a higher demand for. Gold has got a great amount of supply above ground, but the price keeps going up because, well, it's down now, but it wasn't generally up over the last 11 years because there is higher and higher demand at a given price. So all I'm trying to state is that it's not like there's this big surplus of silver sitting there. Silver supply is very tightly held, roughly half and half investment, half industrial applications. You got to factor in jewelry and silverware and that stuff as well. But the supply above ground, that's excess. In other words, no one wants for either investment or industrial purposes, is very, very, very small, if any. Basically, for my work, there isn't any. So the above-ground supply isn't something to focus on too much. I just want to be very factual about the silver market.
Right.
But it's the demand. And now the reason you're able to buy, junk bags and bars and all this stuff is people are giving up. The psychology, what this interview is mainly about, is like, oh, boy, I wish I never bought silver. I bought it at 35. It's 28. I don't want to lose any more money. I'm going to sell it. Or another very good example, someone that bought it early, that bought it at 15 and watched it go to 48. Oh, my goodness, I bought it at 15. I could have tripled my money. I could have sold it at 45. And then, I could have sold it at 30 and doubled my money, and now it's under that. I'm sick of silver. I'm selling it now. So you've got those basic two. There's, of course, a plethora of different case studies, but those are the two main ones.
Right.
And so you get supply into the market based on, as we're talking, psychology only.
And what do you think? I mean, especially with the political, with Greece, that whole back and forth of leaving the euro, not leaving the euro, the whole euro dropping, the new Hollande in France who's talking about joining the BRICS, being a partner with them, the whole political scene that's happening around the world, besides the fiat currencies, I would like to know, where do you think this year, with everything happening, even with them playing their games, where do you think silver is going in value of price by the end of the year?
Great question. Early in the year, to be consistent, because there's people that follow almost every interview I do, and that's their right to do so. Early in the year, I thought we could probably see $60 silver by the end of the year. I have since modified that based on, more current events. I still think 40 is possible. And I want to give a caveat about 40. Once we get above 40, if it's on big volume, in other words, the market's extremely strong going through 40, and it stays there for 3 days minimum and a week or two as more what I'd like to see, it could launch from 40 to 50 to 60 quite rapidly. And the reason for that is technical work, but it's very simple to understand. It's just that there's no overhead resistance. In other words, there's nothing more bullish for any market than a new high. Now, I realize 40 isn't a new high, but it's close enough that there'll be a lot of strong hands by that time holding whatever silver is available, and any new buying, people get excited on price moving up. They don't get excited on prices moving down. They do the opposite, again, of the psychology that you should. You should be looking at today's prices as an opportunity or a gift to either add to your position or start a position, but unfortunately a lot of people will say, well, I'll wait till it goes lower. Well, what if today is the low? You've waited too long, but then it will start back up and they won't get on board. Again, that's a psychological game that you just have to overcome. I mean, most things in life that you do well in require discipline. And the discipline of a good investor is that you don't really care about an exact price. What you care about is, am I buying relatively into weakness and am I selling relatively into strength? If it's short-term, intermediate-term, or even long-term, that's the attitude you have to have. To have the, I'll pick the low or I'll sell the high, is an amateur's attitude. It's not a professional's.
All right, with buying the low, and one thing I have noticed, which is interesting, not the silver bugs, the gold bugs per se, that have been watching it very closely for the last few years. But one thing that recently I've noticed is those that have stayed outside of it have not believed in it. Interesting enough, I've had some people recently that are close to me that are in that group saying, hey, I want to get into silver now. When do you think the low is going to be? It seems to me it's almost like a new group might be those that have been frustrated, that are giving up, but then those that have never participated before are now saying, it's low, and I want to get into it. Are you finding that there's a kind of a new group coming into it?
Yeah, you're spot on, as they say in London. You're exactly right. Any market, that's what happens is there's some that are stalwarts. In other words, they bought low like myself, and they're going to ride this thing out to the, not to the very, very top, but hopefully for the duration of the entire bull move. I'm very convinced that, we have, a few more years at least left, probably 5 or so if you want a number. But as you said, Sherrie, very correctly, is that the stale longs, the people that are selling for whatever reason, get out of the market and new buyers come in. And that takes place in all markets. So there'll probably be more people buying silver above 40 than ever bought it below 40, believe it or not. Because the way markets move is price movement causes action. And the people that are looking at it today and saying, well, it's going to go lower than 28 or 27 and change, I'm going to wait, never really get around to buying it. Once it gets above 40, they'll catch silver fever, buy it, and it'll keep pushing the price up and up and up and up. And with what's going on in the world, and I didn't really apologize, I didn't answer your last question very directly, is you're right. The metals are strength. I mean, this is money for 5,000 years, always been there, always done that for multiple societies. And yet we're in this global economic fiat game where we're supposed to think one currency is stronger than another when the whole thing's a giant lie. And the metals are strength, and that's why we're seeing what you started the interview with. China's increased its gold take by 600% in the first quarter. You've got funds that have never bought gold before buying gold now. A Japanese buying gold. People that have never bought gold. Friends of yours that you're acquainted with that gave the soft shoe to the idea of buying precious metals are now interested in them. And this is what takes place. So the new buyers will be there, and they'll be there in great numbers. And that will force the price much higher, and that's where I think we're going to go. Now, is it going to happen this year? I think it could begin by the end of this year, but I really think you're going to see the biggest move in the metals probably between 2013 and 2016.
Okay, I have a question, and it's a little bit of a trick question here. If we actually had a free market of metal pricing compared to a manipulated market of metal pricing, what do you think silver would be at?
Well, I think we'd be probably anywhere between $70 and $100. I mean, I base that mostly on gold. I mean, gold should be making new highs here. I mean, gold is more well-known and certainly much more widely held by institutions, hedge funds, countries, nation-states, etc. So gold to clear all the junk paper and all the bad debt and everything else that's out there, being extremely conservative, would probably be between $3,000 and $5,000. So if we just take the $3,000 mark and look at what silver's ratio would be to gold.
And right now the ratio is 56.73, which is not the norm, should be actually around the 15 from historical.
Yeah, the historic mean price is around the 15-to-1 mark, or I call it the monetary ratio, the classic ratio. But even if you used, 100-to-1, if you had 3,000-ounce gold, you would have $30 silver, so you'd have $60 silver to 50-to-1 price. So I think that's conservative. Well, gold really moves. Silver goes faster. So again, I'd think 70 to 100 as a minimum, but people get fixated again on the price rather than thinking about how much metal do I have, or if I've got more metal, they think about the price. And rather than thinking about silver will outpace gold and that it's got a lot longer to go to clear the market, they think, again, about price. So I don't want to make price the main issue, but it'd be far, far higher. I'd say probably double what it is now as a minimum if we were in a true free market.
Well, I very much appreciate your time, and I would like to thank you. And also, we've talked a lot, and we've talked about the price, but basically, I know what you're saying, and it's boiling down to is that even though the psychological, what's been happening, the depressed pricing, yet we're hearing about all the political and the countries and the currencies going down, and all these funds are buying, and yet the price is going down. And I know it's affecting people emotionally, because even though it is an investment, and we're supposed to be non-emotional about investments, the metals, the people that have really believed in metals have been very emotionally involved in them over the past few years. The emotional portion of it, what you were saying, people are selling it, even losing money at this time, it's almost like trying to stress that they need to hold on, right?
Yeah, I mean, this is maybe a corny analogy, but you know me, I love to use them. And it's like a life preserver. If you had an abandoned ship and I threw a life preserver that was only 60% full, it had air in it, it would still save your life. And that's where the gold market is right now. But if that life preserver was blowing up fully and it was at a new high, $1,960 gold, you'd feel like, oh, this gold's doing its job, it's at this price and it's saving me, it's saving my financial future. Well, even if a lot of the air has been let out of the life preserver, it's still doing its job. I think that's the best analogy I can give you off the top of my head, because, it may not be the pristine, wonderful life preserver that you wanted, but you know what? It's still going to do its job. Same thing with silver. And, all I could do is encourage people to try to, I won't say fight their emotions, just acknowledge their emotions, but use some logic to balance it out. Nothing has changed fundamentally that makes it the right thing to sell your metals here. In fact, the opposite is true. The fundamental facts that are taking place in the global economic system and the political system on a global basis is so corrupt that there's more reasons than ever to buy the metals. So if you unless you really have to, I can't see in everybody's particular situation, and there are probably some cases that they're using that life preserver. That was their savings. Something important has come up in their lives. That's all they have. And if you really think about it, at least they had that. You know what I mean? But if you don't need to sell, then certainly rethink it before you do.
Well, especially when people, in the way of thinking back to, like Ron Paul said, and I believe what it was when he held up the silver circle coin to Ben Bernanke, I believe it was 2008, he said that it bought 4 gallons of gasoline, and now today, at that time, which was a little over 30, it would buy 11 gallons of gasoline. And so I guess it's almost where people need to look at that portion in the way of the purchasing power of what it was to what it is. And that can help their emotional part of it. It really is an emotional investment to many people who have gotten into it and have watched it closely and are very disheartened right now with it going down. But we know the strength, and as you said, the strength is there, and it's just outlasting.
Yep, that's right. Just keep your conviction.
Well, David, I sincerely appreciate the time that you've taken to discuss this with me. And please tell everybody how they can follow you, contact you, and also subscribe to your newsletter.
Thanks, Sherrie. It's my pleasure. And there's several ways, actually. I have a Twitter feed that's SilverGuru22, and this is just information we put out pretty much daily, not so much on the weekends, on articles that I've read and sifted through that pertain to the gold and silver markets and also the global destruction of the fiat currencies wherever it's occurring. So that's one. Another one is our YouTube channel, and that's Silver Guru. Just go to YouTube and type in Silver Guru, and you'll find our YouTube channel. Do a lot of videos, and most of the audios we do, like this one, also get posted to the YouTube channel. And lastly, the website is themorganreport.com. That's one word, themorganreport.com. We have a free e-letter that's available for everybody. Just sign up, give us your name. It's a double opt-in, which means you have to verify you really want it. And that goes out every Saturday or so. It's got a question of the week, puts out the speaking assignments that I have throughout the year, bullion deals that we find with dealers that we know and trust, and that type of thing. So most people that get on that list basically stay on it because there's valuable information on that list. And lastly, there are 3 paid services, and there's little videos made of each one of those. It kind of explains the basic plus the look over my shoulder service, which shows where I'm doing the charting and showing how I would trade a certain market. Don't just do silver and gold, although primarily that's what we do. Sometimes we do spread trading. Sometimes we look at the bond market, the dollar, whatever. And then lastly, there is a advanced service that's rather pricey that's basically for very well-off individuals and or hedge fund managers. So that pretty much sums it up, Sherrie.
Well, thank you very much. And this has been Sherrie questioning David Morgan with the Morgan Report about what's happening in the metals. Have an awesome day.
Thank you, you too.